So bear in mind that tonight we are only talking about sole trader and individual partners, not companies or company directors. Okay, just bear that in mind right from the word go. So we're going to look at a number of things. We're going to look at how we calculate profit, simple as that. Then we're going to look to see if we've made a loss, are there any reliefs we can claim? And then how that works from that point onwards. Okay, so that's what we're going to be looking at so far. And of course, generally speaking, we're going to be looking at England and Wales. When we look at other kinds of tax, for example, if we end up doing, which we will, property taxation, okay, there are rules about stamp duty that are different in England and different in Wales. But all of this is basically tax that applies to England and Wales, all right, just so that you know. So that is what we're going to be looking at. Now, the first thing to say is this. We need to work out trading profit. We need to work out something called capital allowances. Allowance is a word that comes up quite a lot when we're dealing with tax, and it means something that is effectively tax-free. It's your tax allowance, as it were. I'll just give you one example from income tax that we're going to be looking at later. You may well be aware that most of us have an initial amount of earnings that are tax-free, what's called the tax-free allowance. 12,570 is tax-free, generally speaking. Capital allowances are similar in relation to these kinds of businesses. So we'll go through that as we go along. What do businesses do? Well, they usually prepare their accounts over a 12-month period. And it can start on any date and end on any date. But there is a slight difference with a tax year. And I'll come on to that later as well. But in terms of your accounting period, it's a 12-month period. And again, as you see the examples, you'll see how that works, okay? So when we're talking about income, which is what we have to work out to begin with, we're talking about trading profit that you've made, interest that you've received on your savings, and even rent that you might have received from tenants. All of that is counted as part of your income.